pops it up and then throws it back, and that's exactly what kind of happened here. Let's look at the 5-minute charts. This is how we're looking right now. As you can see, you can just break it down in whatever you like. I kind of like the 3-minute charts. I get a good feel for it. Even though it kind of looks a bit weird sometimes on these opens like this, you can still kind of see what's going on here. Here's a nice little breakout. I'm kind of eyeing off the delta chart here, as you can see. See, next move up, next move down. Remember, this is green means it's being at the bid price, blue means it's at the ask price, and that's the volume in relation to each other. As you can see here, we're having a lot of buying aggression, selling aggression, price coming back down here, more buying aggression. As you can see here, the buying aggression is starting to come in and volume starting to get kind of higher, and boom, we're seeing kind of movement into there. And buyers are still kind of the most aggressive in entering the market. They're not waiting for a price, they're just taking whatever they can get. That's generally a good sign. Wow. And yeah, we're still seeing kind of a positive tick influence nicely above here, and we're not seeing any extremes, which is also good. One thing we don't want to be seeing is obviously a mark just up here in this 800 kind of range here, and that just shows kind of over exuberance, overbuying, and you'll get the arbies that'll start to come in and start to sell off into, or the long-term traders might be looking to trim the portfolio for whatever reason. Get them to come in and they'll just be shaving off those extremes because it's so easy for them to get rid of their positions. And so you've got to kind of watch entering, because you're entering far too late into the actual trade. So yeah, that's just one thing to watch out for. Ideally, we want to be exiting when it hits. And I think I've shown it a million times just how, when it hits those extremes, it's usually a good time to either get out or another example, a good time to get in. But you've still got to read it within the context. You can't really set up a simple system where you're buying the negatives and buying the upticks, because obviously you've got to consider, when are you going to exit, when are you going to enter, what's your risk reward, how does it work with the context of price movements. That's kind of what you're trying to study in all of these kind of trades is what is the context of everything that's going on. This is just something that you can only learn using a whole bunch of screen time. You've actually just got to sit down and watch these markets and learn them fundamental. You've just got to kind of understand everything. You've got to read everything about them, and you've got to discount a lot of crap that gets written about the markets, and you eventually just kind of find you just kind of find a place, I guess. So I was thinking for the trade, sort of the 41.50-ish range. It could be subject to change. I'm obviously going to use kind of the tick to help me time my entries. That's what the tick is the entry timing, entry and exit timing kind of system, I guess. Seeing a little bit of a dry up in kind of interest, you could say. It's not exactly the most meaningful thing in the world. It's just something that kind of makes you look your eye. Okay, as you can see here, we're making kind of a new movement up here, and now we're starting to see kind of a bearish. I'll show you in the 1 minute charts. Sort of making up here. We made a new high. It's kind of trickling down a little bit though. It's not a worry zone yet. It just means it's not going to break out hardcore in our direction, and we'll still have to baby this trade. Probably one of the marks I'll be looking for is just around where my cursor is right now. If it goes past this mark here, well, obviously where we entered the trade, it's probably not looking all that great. So the 738 mark is probably a key mark. As you can see here, a little bit of volume traded here, and just in here we saw a quick, as soon as it sold down here, bang, everyone was into it. So this is kind of a telltale mark around this area here. This is where the buyers started to just come in and flood the market and bang, take the price back up. Now we're getting a little more positive. So as you can see, it doesn't mean much. It's just that you've just got to monitor this, because it's critical that you understand at what point is your position going to be too risky to stay into. At what point is it not going to be worth it? Because you want to be looking to exit early if it's not going to happen, and you don't want to exit too early on a winning trade. So you've got to kind of balance this out, and you've got to work out, well, where's my best spot. Just go back to the 3-minute chart. As you can see here, just can't quite break out of the trade. I'll just stay off the trade the whole time. So if I don't have anything to say, sorry. Just as you can see here, we're sort of getting bearish. Not bearish, but sort of retracting. I'll show you what the tick looks like. Just looks like it's coming down here. It's not a big deal. We're still above the kind of zero line on the moving average, so it wouldn't be uncommon to kind of dip below here and then come back up. That's just kind of the normal waves that happen in this kind of market. You've got price coming in, coming out, retracting, contracting, whatever.